Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, January 3rd, 2024, and this is Blockhead Traders Weekly. It is the first Blockhead Traders of 2024 this year, and I'm joined by fellow Blockhead Trader Viper XL 007. And in this week's episode, we got three topics to discuss with you today. The first being the Bitcoin ETF. That is all the talk lately these days, and probably what's behind a lot of the momentum and movement in the Bitcoin crypto space. I also want to touch on two potential trades, one actually that I bagged as a winner today. It was sort of an earnings trade on Walgreens, and so we'll touch on that. And then I have a potential strangle out there on a high volatility. And when I say high volatility, I mean ridiculously high volatility in Spirit Airlines. And so we'll touch on that as well. But before we hop to that content, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you want to hear about. You can also go to thetagang.com/sprocket888, where I post each and every one of my trades, the good, the bad, and the ugly. Lastly, this is available in an audio-only format wherever you get your podcasts, so please look up Blockhead Traders, like, and subscribe so you can get us on your way to work or your commute. But let's hop to this week's content. Viper Bitcoin ETF, exchange-traded fund tracking the spot price of Bitcoin. That has been, I'll say, the buzz around the crypto space, and many would say has been the driver to the kind of rally back in the anticipation that the SEC is going to take a positive ruling on this Bitcoin ETF, spot ETF, because to date there is no such product, at least within the United States. And that is an exchange traded fund that backed in futures, because there are Bitcoin ETFs out there, but their fundamental backing of that ETF is Bitcoin futures and things like that. This would be an exchange traded fund who is backed with the actual spot Bitcoin product. So the theory goes that once there is a particular ETF in that space, that lots of money from retirement accounts and kind of long-time investors and stuff like that will begin to kind of pour in, because those people wouldn't otherwise go to the actual Bitcoin market and buy Bitcoin, right? They're comfortable going to their exchange and picking up the products on the exchange. I kind of equate it to similarly, back in the day, or even today, right? If a product wants to go big, it gets listed on Amazon, would be the modern day equivalent, right? And that's, you might not want to go to that, or the other place to go buy the thing, but as soon as it becomes convenient for you and at your favorite retailer, the game changes. So this hype in Bitcoin, it's not just in Bitcoin, it's in the entire crypto space. And as you might know from past episodes, one of the crypto things that I'm kind of in is the avalanche world in AVAX tokens. And that too has been on a tremendous rally and kind of all across the board. And it has me personally kind of thinking and scratching my head. Is this one of the situations where you buy the rumor and sell the news? Meaning, do I step off the train here on all of this hype before some sort of ruling or determination comes out on the ETF? And I'm really torn on this personally, because on one hand, I totally think that everything is overhyped. I just think people's emotions always drive things a little bit too far on the extreme, whether that's on the downside, doom and gloom, or whether that is on the optimistic upside. But the thing that kind of keeps me saying, well, think about this, because if you really open this up to and the places of retirement funds and those longtime investors and the people that are basically buy and hold type people, there is actually a tremendous amount of capital that could be allocated, even if everybody only put in, $5,000 from their things into this particular ETF. In order for that ETF to function, that would drive up crazy demand on the buy side of the actual crypto token itself of Bitcoin. And so part of me is like, okay, this could be a sell the news, but also if it does grab, that's a lot of capital. I don't know, Viper, if you're conflicted like me, or what your impression is of this Bitcoin hype.
Yeah, I mean, I'm probably in the same boat. I think more recently, I really started getting into the buy the rumor, sell the news hype, because that's just how things work in pretty much any market. And just the fact that markets are by their very nature, by their function, so forward looking. I mean, we talk about it all the time in equities and recessions and bull markets and all that kind of stuff. That everything you could ever think of is priced in. It's always priced in. There's always insiders in the know and all that sort of stuff. So I certainly see that. But I am still kind of conflicted, like you said, and at least the way I'm resolving it on my side is one of the benefits to just all the bloody noses and the black eyes of just tumbling down the entire mountain in the crypto market and then rolling along the bottom of the bear and the depths of the bear is I had my sticky jacket on, and I just kind of kept slowly accumulating to the point where any bag that I have that's meant to be more of a long-term bag, it does have a very healthy cost basis to it. So I'm kind of using that maybe unfairly to my advantage of like, oh, I don't need to worry about it as much, because if it dumps, there's not as much probability that it'll dump to my cost basis or anything like that. But yeah, I mean, I'm conflicted in the sense that, like you said, that's just an astounding amount of potential capital, and that's where, and this is not, as much as it's going to sound like it, this is not meant to be any sort of FOMO-inducing narrative or anything like that. It's just how I'm actually looking at numbers, which is, market cap. The entire market cap of the entire crypto world right now is $1.596 trillion, which is a lot. But in the grand scheme of the TAM, the total addressable market of capital markets, like, that's really small. I mean, I think that may be smaller or around the same size as something like Apple, or any of the big tech. Like, an entire sector is the size of one tech company. Like, that kind of puts things into a weird perspective of whatever happens, I at least fall on the side of unprecedented potentially being a word. And that's not to say that's what's going to happen, that everything explodes, because let's back up and just some of the mechanics that are at play here of why I'm in favor of sell the news, because all of these exchanges will have their own funds already preloaded in their exchange. So yes, people buying the spot ETF is technically buying the underlying asset, but it is an asset that, I don't know, maybe I need to double check the mechanics of it, but it's an asset that's already been bought, and it's being bought within the exchange. And so it's not like the exchange is going out on the open market and grabbing those, off the open market or anything like that. That's not to say it doesn't have a price impact, because it does. But that's at least one thing that I'm thinking through is the buy pressure for the initial wave, let's say, could already be priced in because the exchanges have already purchased those, those tokens. So my main thesis for sell the news is ETF gets approved. Hooray. Everybody goes crazy. Everybody that, is just letting their emotions run wild is like, this is it. This is the moment. And nothing happens. The chart stays flat, or it does a news binary event wick. And then they're like, well, what happened? This was supposed to take me to the moon. And so then comes the dump. Again, those emotional traders all want to get out or whatever. And then that would be the case for sell the news, because that's probably how these things generally work as far as overhyped expectations meet reality. Reality does nothing. And then again, those emotions lead to selling and sell pressure, only to eventually recover. So long-term thesis, this absolutely, I don't see how this doesn't have a significant impact on the price of the underlying. It's the short-term, mid-term, that, you know, there's arguments, like I said, for the hype-driven bull case, the unprecedentedness of it, but there is the reality of just the psychology of it, I guess, is what I'll say.
Yeah. In my head, I do think long term, you know, crypto is kind of could have some legs given all that we've kind of talked about in the past. And I kind of just go back to sitting around the water cooler, or, you know, talking to your parents or your neighbors, or, you know, everybody had family around for the holidays, right? And I guarantee you that probably everybody had somebody say, "What about this crypto thing?" And if you think about how many potential people, right, that are putting money in bonds, putting money in, you know, S&P funds and things like that, and all of the financial and buzz around crypto this, crypto that. Well, Junior, I heard that there's this Bitcoin ETF, and so you know what I did? I put $5,000 in it. You know, like, how many people out there that wouldn't ever touch a crypto wallet would just throw a couple of grand or whatever at this ETF? And that's what has my head scratching a little bit. You know, I think in game consoles, right? When the Nintendo Wii came out, I don't know that anybody really ever thought that the market that was going to start eating that thing up from sales would extend beyond, you know, your mid-teen Mario fans, right? There was tons of adults that probably hadn't touched video games since the Atari age. Were buying Wiis for Wii tennis. Look, you use this wand, and I'm just, I don't know. That's in the back of my mind on this whole thing.
I would tend to agree, because it just, like you said, there's a certain sense of comfortability that comes with investing in an ETF. And to be fair, I do believe that's why the SEC has taken the path they have of what some people say is delaying to try to kill it and all this other stuff. But we're not going to unpack it now, but I fully believe we have plenty of data in front of us that shows the methodical nature of the SEC to clean up and do their job to ensure consumer protections on such a security offering. And so, you know, I think they understand that's what comes with these offerings as far as the feeling of security. And, you know, sure, volatility is volatility, but it's, hey, you know, like you said, everybody's talking about this crypto thing, and that's Bitcoin, right? So I can do that, right? And, you know, like you said, without having to touch the chain or anything like that. And at the very minimum, it's an entirely new investment sector that, even if it doesn't reach, you know, the oldest or, you know, the furthest, like it's an investment sector, brand new, that just is going to have money flow into it one way or another. So I don't know. It'll be interesting. But I think we got a taste of it this morning as far as how on edge and emotional everybody is. So I don't want to spend too much more time on this, but I just want to go over real quick. If we take a look at my chart here, just to walk through what happened this morning, and this is there's so many different angles and conclusions to draw from this. So I'm going to try to keep it brief. But the number one rule is this is the danger. Not danger, but just the volatility that's involved in this space, and how what I believe is easily manipulated the space is. So this looks like a massive dump here. Like this is the Bitcoin, and I'm intentionally zoomed in on the 15-minute here of just like, man, look at that. And this morning you would have thought the world was ending. That everybody's like, Bitcoin's dumping, and I mean, it was hitting news channels and news networks were talking about the potential spot ETF approval now that we've hit an official new year. there's all kinds of anticipation of like it's about to happen now. We're done with last tax year, new product offering, all that kind of stuff. And then one online news outlet, not even super popular or mainstream, posted an article that said the SEC was going to deny all spot ETF requests, and then blah 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 blah. And then it just plummeted. And everybody just took it. They took the news and ran with it. So I guess this was sell the rumor and then buy the news. But nonetheless, what was interesting to me was if you just look at this chart, it's like, wow, that is a pretty significant curve here. And it ended up being like all the way to the bottom of this wick, like a 10% drop in 30 minutes, which, had everybody panicked. But if we take a step back and, just look at what was going on here, and I've already charted this is a weekly range. And then we zoom out, and then let's jump all the way out to like the 4 hour of Bitcoin here. And all of a sudden we're like, well, I mean, this doesn't look terrible, right? Like there was no new low on the 4 hour, no closed candle below this low. We have a series of higher lows as we've been climbing up here. So honestly, I mean, this was just a perfect example of the emotional response in this space. And as far as the easily manipulated markets go, the only thing I'll say is if we go back to that 15-minute view and we turn on our handy dandy liquidation levels and see where the liquidations were the strongest. So a red bubble and a red line is like 150x liquidation. Yellow is 100, and I believe blue is 50, somewhere along those lines. But it's a size of leverage and therefore size of liquidation. So this is always interesting to me to see on a big dump, what did we scoop up? And you can see on the upside, yeah, there's a lot of liquidations, but it's mostly, blue, yellow. I don't even think I see any red, a couple red. But, I mean, market makers are going to be market makers, and certainly not miss an opportunity to take advantage of a news binary event, push it in a direction, capitalize on those emotions. Then people start selling, and all of a sudden the markets just start scooping up all of these liquidation fees. It's something that I think is very interesting to watch, because it's just, I mean, it's the nature of the space as far as market makers, liquidation points, and all that kind of stuff. It's not, I mean, I guess it's a little speculative, a little presumptive, but I think that's interesting as far as where it pushes the wick. The price candles, they closed perfectly on the bottom of this weekly range, and then we started going back up, and now just kind of sideways. So the main takeaway is emotional selling, maybe tipped over the edge by news, liquidations get picked up. But larger picture price action, anybody that thinks this was any sort of reversal, it's just not there in the charts yet. I mean, maybe this could prove me wrong. Maybe this is the start of something. By the time this video comes out, Bitcoin's at $10,000. Who knows? But I think my main point and takeaway here from this chart is that emotions are high. Manipulation is high on such a tiny market. I mean, again, global market that's the size of one tech company. So that's easy for big money to push around. And this is the kind of stuff we see, which is what makes it so interesting when we get to bigger moments and bigger catalysts in time, and why you also need to be very careful. And let's just drive that point home to close it out of very speculative, very dangerous, very volatile, risk mitigate, all that good stuff that we talk about. But interesting no less, I guess. But speaking of that volatility, that V word, your favorite V word, what's up with some of the volatility in your world?
Yeah, so I got two things I want to kind of cover here on terms of volatility, and it's my favorite thing to do: premium selling. The first one that I want to just briefly touch on, I closed it out today. We got these trades posted. I started recently putting all of my premium selling and all the trades that I do also in the Discord in our trading floor, kind of calling out, hey, this is the trade I'm opening. This is my thesis. And then I circle back when I close it out to say, hey, this is what the result was. This is how it happened. So tune into the Discord there, shameless plug again, where you can get this information typically the day that I take the trade or the day that I'm thinking about taking the trade. And about 2 weeks ago, I put one of these on Walgreens, and it almost was an earnings play. I put earnings play question mark because normally when I trade earnings, I open the trade the week of earnings. I try to do it the day before the earnings announcement, and I'm targeting an expiration of that Friday. So I like to keep everything short, sweet, boom, bang, bomb. All done. But this one was different because at the time when I opened it, volatility was already at 100%. Historical volatility, not 100% spot volatility, means volatility in Walgreens was as high as it had ever been in 52 weeks. And I just felt that was super extended and I could sell that premium 2 weeks before earnings. It was also what appeared to be the top part of the range of the chart. I'm not going to bore you with the chart here. I might pull up the little Flappy Bird to just show you where we kind of petered out and just went sideways. But I thought, you know what? This volatility is super, super high. Let me put out a strangle. And if I'm lucky, I'll get my 50% profit target before earnings. And so I'll actually get to milk the premium without taking the risk into earnings because earnings are very binary. You can go up, down, all over the place on an earnings announcement. So I sold this thing for 79 cents each a contract. That is a put and a call. I did an 18 delta. So, it was trading, middle of this range here. So about 23 on the low side, 29 on the high side. I did 10 of these things. I collected $790. And today, which is the day before earnings. So when this video comes out, check out Walgreens. We'll see if, I should have held on to it through earnings and milked out the rest of my 40% profit. But I was at 60% profit, means of that $790, I could keep 60% of that. I could buy it back, closing out the strangle for just $280, which means I keep the difference. So I was able, this whole thing was buying power of about $3,000. My capital return on capital was 790 out of 3,000. So it gave me a potential return on capital of 26%. Of course, I stepped off early at 60% of that. So yes, I took a little bit more, but I would much rather walk home with $510 today versus going into that binary event tomorrow morning to try to get the other $280 where we could skyrocket, we could crash through the floor and everything could go away. So just looking, I'm not going to go through the candles or price action or anything like that. But if we pull up the chart here on this Walgreens, this is when I actually opened it. So there was a run up. I kind of said, you know what, man, this is stretched. The volatility is super high. Let me just throw that out right here at the end. That's today. I closed this out. These were my strikes, top and bottom side. You can see we just hung out in the middle. Theta burn, theta burn, theta burn. My favorite kind of trade. And so that was just a quick earnings sort of. It wasn't the traditional binary event, but just a beautiful play that I put on, and I'm happy with it.
Yeah, I think that play is interesting in that it really spotlights the I don't know, just the chug is kind of a word that comes to mind of your strategy and the importance of being aware of the mechanics underlying and whatnot. Because like you said, I mean, the couple straddles and stuff that I've done with options, it's so important to have a hard line on your rule set, and like you do, which tends to be like 40%, just close it and walk away, even though this was potentially an earnings play. That when you make a rule, like as I understand it, and you can correct me if I'm wrong, but the whole reason you have a 40% rule set there is just to strike it and keep rolling, strike it and keep rolling. And then mentally that puts you in a much better headspace that when you see something like this where you're 60%, you're like, wow, you're not in the headspace of like, ooh, 60%, I got 40 more to go. You're in the headspace of like 60, that's 20 over what I expected. Like, let's just go, let's walk away and let's keep moving. So I feel like that kind of vindicates or validates a lot of those rules that you have, as well as exactly like you said, when you have it charted out like or written down like that, is $280 worth the risk of volatility, worth the risk of, I mean, I'm pretty sure the entire play could blow up and become red, depending on earnings and depending on what happens. So is it worth it to risk it for that extra, just little finishing it off? And I would say it's not. Obviously, you would agree to that.
No, that's exactly the way that I think about it. It's you got $500 that you can keep in your pocket. Do you want to put that $500 on the line for 200 more? And that's, where that my rule of it's actually 50% collection comes from, and it's all around that probability of profit. So my premium selling is focused on being high probabilistic trades. And so when I open these trades, the odds of winning, the probability of profit, are typically on the 75% mark. Now, that 75% probability of profit means expired completely out of the money. When I decide to step off the train at 50% profit, and there's no exact number of what that probability of reaching 50% profit is, but it's higher than the 75% of profit, because that 75%, is out of the money. So it just enhances one, win, which helps your mental state, and two, it's all about just that slow burn, click, drip in the bucket. Yeah, so I'm happy with it. And speaking of that, one of the strangles that I am considering putting on here in the coming days, and I'll just share it with you guys here, is a strangle on Save. So this is Spirit Airlines. The volatility on this thing is absolutely redonkulous. Now, caveat, spoiler alert here, there's a reason for this volatility, and this is what has me giving pause to this trade. And this volatility really centers around the antitrust lawsuit that Department of Justice brought against this merger that basically says, hey, if we let these two, this is going to be bad for consumers, high prices. And so a lot of this valuation, a lot of this volatility. So the stories kind of go that, if Spirit is allowed to merge with JetBlue, you're potentially looking at a deal price. Now, this is probably open to renegotiation, but probably you're looking at a deal price that ends up being around $30+ a share of Spirit Air. And then the idea is that if this deal is not permitted to go through, Spirit has some uber high debt on their balance sheet, all coming due very soon. And so the likelihood of bankruptcy and cash flow problems is extremely front and center and real and present danger. And so you're probably looking, before all this stuff was announced, Spirit was trading at like $9. So we're currently at 15. And the expected move right here, the expected move in 15 days to expiration, the expected move is plus or minus $9 on a $15 stock. That amount of volatility is, 280% spot volatility. That is insane amount of volatility. And so if we just kind of take a quick look at the chart on what that kind of just looks like visually here, right? This is your trading here of Spirit, $15 to $17, right? Look how far away these 20 delta strikes are. On the top side, you're talking $25 up here and $12 down here. I mean, just crazy range from that. And as I had pulled up there on the screen, I'm able to collect $2.28 per strangle on this. $2.28 premium for 15 days to expiration on a $15 underlying stock. Just ridiculous percentage move. So this has the potential of 1.1K in premium with only a 3K in buying power, because the volatility on this TD Ameritrade says, okay, look, you're just going to have to buy these things at your strike price. So the maximum part of what I actually have to pocket is assuming that I'm buying all these shares at my $12 put strike. And that's what I have to put up in buying power. So this is something that's out there. This is a different trade because it's almost like a pharmaceutical where you either get approved or denied by the FDA sort of thing. And we all know how that goes. But this is definitely something I am strongly considered entering as kind of tomorrow comes around in the coming days to get in before that type of result comes in from the antitrust. So that brings us to the end of this week's episode. Like I said, Bitcoin ETF, buy the rumor, sell the news. I can tell you I'm super excited that of the volatility and potential options plays that this might open up, even though ETFs are kind of lame-o when it comes to options. I am excited about the expansion and legitimacy of the sector. That will be fun to watch, interesting to watch. We'll keep you in tune, of course. We'll put Viper Hot on it, the special correspondent there into crypto world. And additionally, premium selling plays. It's my bread and butter. It's really what kind of turned around is in past episodes when I reviewed back on the year, things just started clicking when I went back to my rules. So I'm back in my rules. I got my trades. I'm posting them in the Discord as I take them. I'm calling out these crazy volatility things as I see them. I'm going to dabble in it. I'm going to keep after that core recipe of when you have extreme extended volatility, sell the premium, ride it out. Yeah, you might get a sign sometimes, but most of the time the probabilities are going to be on your side, going to be in your favor. And so just going to keep it real with you guys and lay those examples out, talk about them on the show. And if you don't like hearing about it, drop us a line and tell us what you do want to hear about, and we'll cover that. Otherwise, good luck out there in 2024. It's a brand new year, brand new opportunities. Lock yourselves in, start developing some habits when it comes to trading. You'll get there step by step, inch by inch. And don't forget, think outside the block.